So, hello, and a massive hello to everybody. How are we all doing? Good stuff. So, welcome. Hope everybody's having a great day wherever you are, whatever you may be doing. It's 50 pips, rocking and rolling here, 30th of November, 2018. No trade calls, no recommendations, or response for their own stuff because we're here for educational purposes only. So just a little bit of a live update here. So there's no real um, agenda. I'm happy to review anything anybody wants to look at. I'm not going through anything in particular. Today's actually the birthday of the blog. So we've been going for 9 years now. So I thought it made sense to try and pay it forwards and do a little bit of an live update and tackle anything anybody wants to review. So as usual with these, there is nothing that's off the table really. Just ask whatever you want. It could be trading, life, diet, sports, whatever related. And if there's anything you're stalking, anything you want me to review, just let me know and I'll go through it. Again, don't be shy. Any question you have, any chart you want to have reviewed, we'll tackle it. So the only thing I'm stalking at the moment is a smaller size short on the SPX. So have a look at the SPX, right? So basically what's happening on the SPX, so the ES, right? Well, here, again, assuming that TradingView is going to cooperate. If not, we can always switch over to an MT4 terminal. It's the important thing to keep in mind here is that in terms of SPX is that we're in a broader chop zone. Does that make sense, Adam, right? It's just hovering here, not an awful lot going on. So we're stuck inside the yearly range. And right now, this is a classic situation where both the bulls and the bears can easily rationalize, can easily come up with a really clear and clever example for why we need to go back and test yearly highs, right? Or the high of the range, or why we have to go back and test the bottom end of the range. So the way we're looking at it is as long as we hover inside this area, it's, there's not a lot to do. This is just the yearly range. And especially this area is very, very choppy. So what we say is don't be confused about velocity of move inside range, okay? So just to look at both sides of the story here, essentially what the bulls are going to be saying is that's it. Powell gave us the go-ahead. We've put in a series of higher lows, right? This is an area broadly where we've bounced before. Everybody was panicking and we were worried about the Fed and we were worried about China, etc. And essentially Powell's backed off and Trump said we're going to come and we're going to have an agreement with China, so all is good. The G20, we'll get this announcement over the weekend, is great. So that's it. We put in a low, we put in a higher low, and now that's it. The Christmas rally, the Santa rally has started. So everybody's saying there's bound to be an announcement on Sunday. No matter what happens today, even if we move further down, the bulls are going to say this is still a buying opportunity. They're still going to say this is a gift from the gods because once this G20 is done on Sunday, we're going to have a positive announcement. We're going to gap up and we're going to run even if we retrace. This is open season for the Christmas rally and the only way is up, baby. And that's the way they're going to be looking at it, right? And it's entirely logical. There's nothing crazy about looking at it that way, okay? The bear case is essentially no. Something broke back in February, and even though we got this cocaine angel drift higher, this was bound to fail in a fraction of the time it took to rotate higher. These low liquidity grind higher, something sick, especially because all the tech names have broken. And now that we've broken, this is just, we've started a bear market, and these are just aggressive corrective rallies in a bear market, but ultimately we're going to trade lower. So even if we make our way all the way back into these 2800s, 2850, this whole range, this is going to be a gift from the gods to sell these, because we have to test these lows because something is broken. Okay, so essentially those are the two ways of looking at it. In terms of your actual trade, what you're looking at is this short. What I would say is be careful, because anything that happens inside this range cannot mean a lot, right? You really need to get break outside. I think right here, I wouldn't be looking at it necessarily on a 1 hour and a 4 hour. You can look at it on the daily. And here, what most people are going to be looking at is this pattern. And the question is, have we put in a little bit of a high yesterday, right? And you can look at this if you're looking at basically the ES, which is SPX, or you could even see this on the NASDAQ, Adam. It's exactly the same. It's exactly the same pattern, right? Let me just see if we can bring the NASDAQ up, and I'll show you. And out of all the indices, you know, the real excess is in the NASDAQ. The NASDAQ is where things have gotten crazy. So a lot of people will be focused on the NASDAQ. I mean, just to look at it briefly, right? If you take a look at what's happened, you know, since these rallies, right? You've got Germany, emerging markets, SPY, Dow, Nikkei, FTSE, Shanghai Comp, Euro 50, right? And what's the cocaine angel? It's basically the NASDAQ that's gone completely cray-cray, right? So that's the focus. But essentially, look at it here, right? This is what most people are going to be looking at. And as I said, Adam, the daily, right? And people are going to be saying, look at this. Similar action, we pumped small and then we failed. Pumped up, small close, and then we failed. So a lot of people are going to be looking at us having put in a swing high yesterday. So this is particularly interesting. And as we discussed, I have no problem, since the 7,000 is a pivotal level, looking for shorts as of yesterday's close off that 7,000, because if that does end up holding, you know, the risk for the reward on new lows is particularly interesting, right? So that's the way I would be looking at it. Does that answer your question, Adam? On the SPX. Let's get back on the SPX. So here we'll have to see how this trades, but that's the way I would be looking at it. Okay. How would you? Oh, okay. Well, let's look at it. Parm, let's just look at it. How would you manage trying to lock in a good monthly P&L, seeing this is the last day of the month, versus having open trades over the weekend? That's an interesting question, because we've got a lot of event risk over the weekend, right? Now, essentially your month ends at the end of the day, right? The big question is, what if something funky happens into the close later on, et cetera, et cetera? As always, everybody knows what the right answer is, right? Deep inside, but people want some kind of magical solution. The right answer is, if you want to lock in your month right here, right now, it's very easy. You find the flat button on your broker platform and you go flat, and you've locked in the month, right? That's the only way to look at it. In terms of holding over the weekend, you've got an awful lot of event risk, right? So the question is how to tackle that. Now, I would say, again, if you're concerned about the month end, I just lock it in. If you want to take a punt on something happening over the weekend, you would want to look at it in terms of what's likely priced in and what are the possible scenarios. Does that make sense? Now, keep in mind also, since you're going into the beginning of the month, even though the trade would end up not going that well, right? If you take a punt into the weekend, it's the beginning of the month. You've got the whole month, even if it's a shorter month, to try and get back. So it's not the end of the world. I wouldn't, Parm, I'd never do that if like you're right, going into the end of the month, like if the weekend and then the month closed on the Monday or the Tuesday, there's just too much risk on messing up your month, okay? So this scenario makes a little bit more sense. So what are you looking at? You're looking at, yeah, essentially it's a dollar play, right? It's a dollar play. I think here the risk over the weekend is a lot more in terms of equities, what equities do, and the fact that you don't really have defined risk, because a lot of people will think, okay, I'm going to take this trade, I'm going to have a stop in the system, I'm going to risk this to make that. Well, unless you're expressing that trade through options or something, or some kind of a spread trade, if it's just a naked position, you don't really have defined risk, because the market could gap above or below your stop, and there goes your defined risk. Does that make sense? But so in any case, you would want to size your position small enough to make sure that, on let's say on a Forex pair, you would account for an extra 100, 150 kind of slippage kind of thing, right? So you just want to go smaller than usual. But, look at it. Let's go through a couple of these. SPX, right? Assuming we'd close here, right? Well, if we get a super trade deal out of China or whatever, which I don't think is the case, most likely, what are the chances of price going and opening, gapping up above this huge level, right? Probably not huge. That would entail essentially market opening up more than 3%. So I would say you've got a fairly decent chance at this somewhere in here containing the bounce, at least for you to be able to get out of your position, okay? Assuming it's going to bounce and hold. Now, if we come out of the weekend and this whole pump has been on the assumption that we've got a trade deal, does it make sense that there's a very good chance that if it's a horrible weekend, this whole move gets undone and we fill this gap and we fill this gap? One done and two done. And if that's the case, then it means it's probably game on to retest these lows and retest these lows. So I think when everybody's assuming this is going to pop up and everything's going to be a done deal, if you're going to try and hold risk, I think the biggest bang for your buck or the pot odds are trying to hold some kind of short, not trying to hold a long. Does that make sense? And equally, if you're looking at it in terms of DXY, and then we'll look at, if you're looking at terms of DXY, yeah, I'm going through these carefully because, I just want to answer the questions as properly as I can. It's more about quality than quantity, right? So on DXY, you would assume here that no matter what happens, unless it's some kind of silly thing, would it make sense that the strong dollar, as we like to say, is going to break the world, right? So if anything, you would assume anything coming out of the weekend, not necessarily to be positive dollar. Does that make sense? Very, very strong dollar, credit's in trouble, emerging markets in trouble, et cetera, et cetera, et cetera, right? So worst case scenario here, right? What could justify, a rip? Well, okay, we could get some kind of a rip, but would that justify a move back above those highs here? Probably not. Does that make sense, Parm? So it means you got about 1% risk to the upside, right? Call it 1.5. You want to go silly? But does it make sense that if we get, something which continues to go on the bearish dollar cap, which is already the move that's in play, then we've got this whole move that's going to start again, at the very least back to 96. So it's the same thing with the dollar. I mean, nobody knows what's going to happen, and essentially, it's a coin flip, even though not really a coin flip because it's not 50-50, right? You always have three options, right? The option on anything is that it goes up, right? Second option, a lot of people forget, is that it goes sideways so that it doesn't move at all. And the third option is that it goes, well, down, but, it goes red. But I think here, especially on if you're looking at something like dollar index, there's a lot, you know, if you're looking at the chances up, it could be yes, there's a chance. Chances sideways, yes, and chances down, yes. So I think there's a lot more chance that sideways to down than up. And I think it's the same thing to, or in any case, the up will likely be less than the negative surprise of the down. Okay? Does that make sense? You like the colors, Debbie, and getting crazy with this, right? So yeah, and if you're looking at in terms of euro, where does that take us for euro? Well, for us, I think it's a fair, you know, that you have to stick to your guns and stick to your view. And our base case, which we put out in the, you know, in our video updates, we triggered along a while ago on this. Actually posted it on the YouTube, right? So we post that afterwards on the Tuesdays. And what we discussed, if you missed that, you can look at it, is basically the euro and the fact that we're also going into that seasonal period on euro, which tends to be bullish euro. And here, if you go on a shorter time frame, we talked about how we were going to react around the 113 and the fact that we're going into this seasonal period, right? We also felt that with USD-CNH trading around close to 7s into the meeting, we'd probably see this get a smackdown, not up, because the Chinese probably don't want to go into the meeting with USD-CNH trading at 7 or 7.50, something like that. So here, what's apparent on euro is that it's what we say, it's been unable to attract new buyers below the 113. Sorry, new sellers below the 113. So you see held, almost looked too good to be true. We trade this to the long side. Then it didn't work. And then it could not attract new sellers at lows, and it started basing, it came back up, right? At this point, this is very important, right? Because what happens, you get another smackdown here, right? After this unable to attract new sellers, and we go back low. But here what's happened is we've made a higher low, right? So here it looks like it's trying to do a good job at basing. Now it doesn't mean it can't come back down and break lower. It doesn't mean it can't come back down and still be choppy for a while. But right now it looks like it's trying to hold. So I assume your question here is about holding euro over the weekend. Is what would you, hey Nick, how's it going? Hey, thanks, Nick. I mean, that's the way we like to look at it, right? And it's the same way, and we did it the other day in the webinar, right? It's just to not sidetrack, because I think a lot of people don't look at things this way, and I think it really makes sense to try and look at these rationally, because essentially, let's be clear, right? The really important thing is nobody has a crystal ball, right? And nobody knows anything. Okay, we can agree on that, Nick, right? Nobody has a crystal ball, nobody knows anything. Essentially, it's always a 50-50 shot. So we try and use position sizing, risk management, our outlook to try and see if we can get a little bit better at 50-50 if we manage by managing our trades, our positions, by engaging where we have asymmetric risk reward. So what happened? This is the same rationale, same discussion we went into Powell, right? So what we said is, you know, as the dollar has been ramping higher, right? What is the expectation? The dollar is ramping higher, and the expectation is that we are far from neutral, right? Far from neutral. We got a hike, and the market is pricing in, you know, December hike and the rate hikes next year. And of course, you need to buy dollars, right? You need to buy dollars. It's a positive dollar trade. So going into the Fed speech, the Powell speech the other day, what could happen, right? Well, essentially, he could say something that was very positive for the dollar. He could say something which is, you know, all things being equal, neutral dollar, or he could say something which is bearish dollar, right? Now, in the context of the fact that the market has been ripping higher, assuming that he said we're far from neutral, we got a hike, we're going to price in 2-3 rate hikes next year. What are the chances of him saying something that's going to mean that you have to change that and price even more bullish dollar, right? When Trump is saying he doesn't like what they're doing, et cetera, et cetera. Essentially, he would have had to come out to say, hey guys, give me a piece of paper and a blade cutter. I need to cut myself, and I want to sign in blood that I'm going to raise rates at every single meeting next year. Quarter point every meeting, right? That's essentially what he would have done to mean that we got to go a cocaine angel rally on the dollar, right? He could have said something that is so-so, and the market stays where it is, or he could have walked back his comments a little bit, at which point that would be the most surprising scenario. So if we like to take pot odds, like risk 1 to make 2 or 3, the only thing you could have done going into a speech, if you wanted to have a position on, is be short dollars. Does that make sense? And that's the way we try and approach if you want to trade during news releases, over G20, that's the way we look at it. It's not rocket science. We're not geniuses. We're just trying to look at it in a very simple way. That's all, right? So going back to, and thanks for the comment, Nick, because it gave us a chance to go through that, because I think it's important. I think a lot of people try and make things a lot more complicated than they are, right? And they think people have a crystal ball. You know, nobody has a crystal ball. You're just trying to think through things. So our base case is that essentially this rotation is in play. Thanks for the comment, Nick. This rotation is in play, and we have no idea what's going to come out this weekend. But our base case is still that as long as these lows hold, the 113 holds from a closing basis, there's a chance that this is the start of a bullish move correction back into the 115.50, right? And if this can close below this, it means it'll close above the 100 weekly moving average too. And that should open the way for a seasonally bullish period and for us to see this try and rotate all the way back into the 200. Are we calling for the euro to go crazy 130? No. Are we calling for a big change? No. We're just looking at this in the weekly context, and there's a lot of chop inside these moving averages. Sorry, the 50 capping and the 200 capping. We're just calling for this move inside the range. So at this point, what this means is during the week, especially into Powell, when this trades back into the 1300 and these lows are, you know, into the 1220s, whatever, you know, the question you've got to ask yourself is, are you willing to risk 80 at the 113 for a move back there to make 200? And if indeed this plays out as a seasonal pattern, all the way back into the 118, so to make 500. That's the question. Now, some people are going to say, hey, 50, are you out of your mind? What have you been smoking? 80 pips on a trade? That's huge. Well, remember, 80 pips, 200 pips, 500 pips, even though some people might get excited, mean absolutely nothing. Why? Because what matters is, surprise, surprise, the dollar value that is attached to each pip. Don't forget that, right? People get excited when they hear, so I made 50 pips. Well, it's not the same thing making 50 pips trading $1 a pip and trading 1,000, right? So again, what you have to focus on, what is the asymmetric risk reward opportunity? How are you going to manage that ideally with multiple lots? And to size that to make sure that those 80 pip stop makes sense for you inside your strategy, inside your risk reward, whatever, right? And for some people that may mean sizing it, you know, a 1K lot. For some people it may be a 1M lot, you know, multiple lots. It's for everybody's different. That's why, you know, the focus is really on location, asymmetry, the size, the risk reward in terms of, and then you size it accordingly, okay? Okay. So how are we doing for time? Well, for 24 minutes, I've just covered 2 charts. So is that's either we're doing a good job at being thorough, or 50s talks way too much. One of the two. So let me go through the questions because they're building up. How long have we got? Well, depends on how the market moves because I got some positions open. So I'm just going to try and stay on for as long as possible. Hey, how about USD JPY? Well, hey man, how's it going? How about you give me a little bit more detail? Can you be a little bit more specific? Because what time frame are you looking at? You know, it could be very different. The view could be very different if we're looking at a 15-minute chart or a monthly chart. I suppose we can just do a drill down since I don't know if you've left the room, if you're still around, or you got bored of me talking about the others. So USD JPY, what's going on USD JPY? Well, again, it's as usual, it's one big dollar trade, right? Most of the time. Sometimes we get things trading a little bit out of whack, but it's really a dollar trade, right? So it's going to be very, very similar to what we just discussed on DXY, very, very similar to what we discussed on the euro. So what's happening on the yen? Well, on the yen, this is probably an old chart, but essentially I think the levels we're focused on 114, 112, and 110. Oops. And it's kind of ping pong, chop chop inside this range. Okay. Now here, you can see that this is actually trading here pretty much where it was trading back 2017. And there's been an opportunity to make money, to lose money, but essentially we're not going anywhere, right? Similar to euro, similar to the other things. So the big question is, how is this going to trade? The way we're looking at it is very, very simple, right? And this 114.50 zone to us is a sell zone as long as this holds from a closing basis. So that means as long as we close below this area on a daily, on a weekly, we think that the path of least resistance or the asymmetry in the trade is to the downside, not to the upside. Now, I very well understand the fact that a lot of people will be looking at it saying, hey, 50, what are you smoking? This is actually broken back above. This is a break. This is a bullish, and it's going higher. Sure, it is, but the whole point is it's stalling there. So maybe it needs to do this. Maybe it's going to do this. It could also go straight up, right? But it's not clear. So the way we look at it is in terms of where it's clustering, right? And right here, it looks like it's stuck. Now, a lot of it is going to be down to, it's tricky. It's going to be down to equities and what's happening in general, the dollar. You're getting a lot of mixed flows here, which is confusing the people because this was trading equities up, yen up, equities down, yen down. And then the other day, Powell came out and we got equities down and yen down because it was just a repricing of the dollar, right? So that's where it could throw you a little bit off guard. So I would try and not be too clever about the way you look at it and just focus on the levels. So as long as this holds, we expect it to come back down. The levels are 114, 112, 110. And, if we close back above, then of course, likely this is going to attract. If we close below, well, then this could possibly attract. But right now, it's just kind of buying time, right? It's buying time. But the big question is, again, if you see equities roll, this is going to catch up very, very quick, right? Especially the way we're trading now after Powell. If equities roll, this is going to catch up quick to the downside. But it's choppy. It's been a very frustrating trade for those who've been trying to hold a swing. Very, very frustrating. Similar to Swissy. And hard, right? Also like Swissy, because to hold it, depending on how you're expressing the trade, but especially if you're trying to express the trade through spot, is the negative carry is killing you, right? So they're really tricky ones. So you have to be very tactical about them. Okay. Okay. So let me go through the questions. Are you doing a special deal on any of the stuff? Because it's the no, we don't really do that. Just because I've always had a fundamental problem with that. I just don't understand people who do like Black Friday sales, all that kind of stuff. Well, I understand why they do it, but to me, it just doesn't seem fair to subscribers. You got a price and that's the price. It's just really shitty in my opinion. You have a service and then depending on what day somebody wakes up or what offer they get, they just get a different price. It just seems strange to me. Anyway, I wouldn't like that. I wouldn't like being subbed to something and I know that different people have different prices, lower prices just for the hell of it. Thanks, man. Yeah, cable. What's going on cable? Well, this is a bit of a dog. No offense. And it's tricky. This is one of the pairs which I would, on any given year, it's probably in the top 3 of most traded instrument for me. So this year's been tricky because it's really knocked it down because there's just too much event risk. Now, I know people will love taking trades because they say it can move a lot, but they always tend to forget it can move a lot against you. And, I'm not that interested. So there have been good trades. We actually had this was like a 1 hour, 4 hour short. We traded this, got out far too early, but haven't been doing much here. I'm going through the questions and it looks like most of them are revolving around what happens if we get a hard Brexit or not a Brexit. Well, what happens is I have no clue. Now, what I think anybody will tell you is that here, if we get some kind of a deal and the shorts have to unwind, do not be surprised to see this trading back into the 136, 137s. And if we get, back to reality check, whereas things get ugly, then do not be surprised if this trades back to the 119.50. These lows will have to be tested because on a no deal, ugly no deal, we definitely have unresolved business here. So the problem is what to do in the middle because you've got ranges inside ranges. I don't think it's particularly interesting to trade to have swing positions on because of the overnight risk. I think intraday there have been some interesting opportunities, but I would much rather express those through other charts. And if you have to have a view, especially those of you who are looking for a negative GPB view, as we've been talking about for over a year, we'd much rather express that through Euro GPB, not through GPB USD, because you don't have the wheeling and dealing of the DXY, and essentially it's a much purer play, right? And it fits in with our overall fundamental outlook for Euro too. So we'd much prefer to, if you had that view. And in any case, we'd prefer to play that, express that view through Euro GPB. Okay. Yeah. Balls deep short on cable. Not a chance the deal gets through Parliament. Well, yeah. I mean, whatever. Yeah, that's a good thing. The whole question is there's a couple of things, right? Now, which first of all, if you're doing this, I would say professionally as a business, as a general rule, you'd probably not want to go balls deep, just as a side note, right? Because the focus is being around tomorrow, not necessarily what happens today. So we like to try and do things in a professional manner with controlled risk. And sure, but I think here, question is, does anybody expect the deal to get through Parliament? Yeah, it's the same discussion we had on dollar, right? So the assumption is got to be short cable because there's no way the deal is going to get through Parliament. Now, I don't know, but does anybody expect this to go through Parliament? No, right? Not really. So therefore, what's the edge of getting short here, expecting this not to go through Parliament? Exactly, Nick. If you're trying to take a punt at this, the trade is long, not short. Now, full disclosure, I don't have a position on. But since everybody, their grandmother, their hamster, their pet goldfish doesn't expect this to go through Parliament, you should argue that largely this is priced in. So the trade is not to get short into a brick wall, right? The trade is to size it very small and play for some kind of a pop, right? Sell the rumor, buy the fact, whatever. So that's the thing. You always have to think in where is the price in relation to what the market should be pricing, and what are the chances of something coming up that is going to upset that idea, right? So for me, and just to make it fun, as you use the lively expression, I'll use another lively expression. For me, the piker trade is to get short here, looking for this to go down. Now, full disclosure, I have been trading this only to the short side because I think that pretty much this is just an accident waiting to happen, and they're all everybody's living in la la land, etc. Right? So I'm not going to get into a big discussion, but I would never get short here, right? I would never get short. I'd love to get short a bounce or something, but it's a tricky one here. But I would expect we need to probe lower because this is going to get uglier before it gets better. But I'm not going to be shorting it here, right? No matter what happens. And if it goes down another 100 pips here, I still wouldn't get shorted, because what am I going to do? Short it with a tight stop and it's going to open 300 pips against me over the weekend to try and make 300 pips or 200 pips to the downside? It's no edge. It's no trade here. Right? Just doesn't make sense. Okay. So this is getting a bit long. 36 minutes is going to take ages to upload to YouTube. Let's do crude. Now, what's going on crude? Now, this is another one, right? And again, all people looking at those homemade stats get in trouble, right? That's a classical got Twitter. Oh, 2 weeks in a row. This has to bounce. Oh, 3 weeks negative in a row. Oh, it has to bounce. 4 weeks negative. Oh, it has to bounce, right? And before you know it, you're down like 20 grand a contract, right? It's just, so our base case here was, so we got out of the trade far too early, right? But that's just the way it is, but we got a nice bang for our buck very quickly. Our trade was, as this pressed back into the 100 on the monthly, and you had some nice failures here, was the short for the move back into 55s, right? So that was done. So right here, we've been waiting to try and get long, right? We understand that this could be a very ugly unwind, so we have no intention of trying to catch a falling knife. So the way we look at this is we only get long if it tries to stabilize, right? And we took a stab at getting long at first when it started to hold back above that 5170s, and then it got absolutely no traction and had bailed on the trade. And now this is starting to get interesting again, right? So the way I would look at this is, don't be surprised to see this try to hunt stops to the downside and cause pains. And you see even the daily close below that 5170. So we're really looking at that 5170 as a big level. And we think that if we can stabilize here below above this 200 on the weekly, then you could get a time for a little bit of the pop. But essentially, don't forget that you've got huge event risk here. So this is clearly not one you want to wake up to an ugly surprise. Now, in terms of the bigger picture, we think, and we continue to think, the pain points, that's not what I wanted to do. The pain points are essentially the same, right? As we start to trade above the 70, you'll get Trump and company having a nervous breakdown, and you'll get all kinds of verbal interventions saying, you got to smack this puppy down. And essentially 70 to 80s is just verbal intervention zone, right? You start to get this below 50s, Then you get the Russians, you know, a bunch of everybody else starting to panic, you know, because it's starting to eat into break-even levels, etc. And you'll start to get verbal intervention. So basically, something really ugly has to happen, and the move could be explosive if it can get back above or get back below this zone. So ultimately, we'd expect to see a lot of verbal intervention and choppy trade around the 70 mark and around the 50 mark. Now, essentially here, the way it looks is the Saudis are basically in Trump's back pocket. And the big question is, are they going to say, okay, let's cut, or no way, we're not cutting? So I think the nasty surprise here is a puke lower, because below the 50s, you could see this print 40s very, very quickly. But as long as this holds, do not be surprised to see this rally quickly back into 55s, possibly 60s. But essentially, all things being equal, I think that this whole range here is a comfortable-ish zone for most. So would not be surprised to see a trade here. But again, into next year, I would not be surprised to see this down 10 or up 10 very quickly, but I think this would suit most people, would still be choppy around here. So I would not necessarily be trying to play for the next big swing here. I think it makes more sense for this to stay a little bit range bound. Famous last words, right? So, okay, guys, pretty much 45-minute mark. I'm going to call it a day just to make sure we can upload this quickly to YouTube in case those people that missed it. As always, it was a pleasure. I'm going to try and do these whenever I can. As usual, if you have any questions, don't hesitate to write in the blog or ask me on Twitter. If I can, takes me 2 seconds if I'm not managing a trade to post a chart, if I can help you out. And if there's something a little bit more detailed, maybe I can try and review it in one of the YouTube videos I post. Thank you for spending some time with me. Thank you for flying with 50. Have an awesome one, guys. And let's hope everybody has an awesome December, right? Thanks for all the questions again. Thanks for stopping by, guys. Have an awesome one.